Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code Blockchain DXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and FinTech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and FinTech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbor. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and FinTech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbor. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. We're your shortcut to getting up to speed without, getting totally overwhelmed.
That's the plan.
Today we're jumping into the really fast-paced worlds of digital assets and AI. We've gathered a whole stack of fresh stuff for you, some big U.S. legislation, shifts in the global markets, and some pretty interesting tech partnerships, too.
Yeah, and our goal is basically to pull out the key insights, the important bits from all this material. We want to give you a clear picture, maybe connect some dots you hadn't seen, and hopefully make it all make sense.
Okay, let's dive right in then. Big news over the weekend. President Trump signed the Genius Act into law. That was July 21st. This sounds, well, pretty huge, right?
Oh, it's definitely huge.
Yeah.
Especially looking at the big picture, the macro level, it's mostly seen as a positive sign, sort of setting the stage for a new phase of U.S. leadership in digital finance.
Leadership, okay.
Yeah, the stated goal is pretty ambitious.
Yep.
Make America the global leader, maybe even the crypto capital of the world. And it's apparently part of a bigger strategy, something involving a strategic Bitcoin reserve, too.
Wow, okay. A Bitcoin reserve. So ambition is definitely there. But let's get down to it. What does the act actually do? What's the core?
Right. So at its heart, the Genius Act creates federal rules specifically for stablecoins. That's the main focus. And it has a few key aims. First, they hope it'll drive innovation, bring in massive investment. Second, a big piece is consumer protection. It mandates things like 100% reserve backing for stablecoins.
Okay, that sounds sensible.
Yeah, plus monthly disclosures on those reserves, strict rules on marketing, and making sure holders are first in line if an issuer goes bust.
Right.
Third, it's about strengthening the U.S. dollar's global position. The idea is that stablecoins backed by dollars will boost demand for U.S. treasuries.
Ah, reinforcing the dollar's dominance. Makes sense.
Exactly. And finally, there's a strong focus on combating illicit finance. So enforcing AML, anti-money laundering, and sanctions compliance. It even includes technical requirements for issuers to be able to, like, freeze or burn assets if needed.
Okay, freeze or burn, that's where it starts getting really interesting, isn't it? Because while it sounds positive on the surface, stability protection, U.S. leadership, we're already hearing some pretty strong pushback. What are the main worries from, say, Bitcoin maximalists or even some Republicans?
You're right. The reactions are definitely mixed. A major concern is, well, regulatory overreach. A lot of people worry it gives the federal government too much power over stablecoins, which could, potentially stifle smaller companies, startups,
Right.
because the compliance costs could be huge.
Right, the burden.
Exactly. And tied to that is the innovation versus compliance thing. The Act specifically excludes algorithmically backed stablecoins. For some innovators, that's a big negative. The strict reserve rules, monthly reporting marketing limits, it could make it really tough for smaller projects.
So favoring the big players, potentially.
Potentially, yes. Then you have the privacy concerns. That ability for issuers to freeze, seize, or burn assets. That raises serious red flags about government surveillance and control for privacy-focused users. Some call it a backdoor.
I can see why.
And it's also seen as a potential threat to decentralization itself. The Act is really built for centralized issuers.
So maybe not great for DeFi innovation?
That's the argument, yeah.
Yeah.
That it can hinder DeFi. And lastly, there's the global competition angle. Even if it strengthens U.S. leadership in some ways, the worry is that heavy regulation might just push innovators elsewhere.
Like Dubai, maybe? Or other places with lighter rules?
Exactly. Places like Dubai. So ironically, it could potentially weaken the U.S. competitive edge in the long run.
So it really boils down to that classic tension, doesn't it? Control versus freedom, innovation versus regulation.
Precisely. It highlights this fundamental philosophical question. How do you balance financial stability and consumer safety with the core ideas of decentralization and permissionless innovation that kind of sparked the whole crypto movement?
Yeah, that's a tough balancing act.
Especially when you think about Bitcoin's origins trying to separate money from state control. This act definitely brings that debate back to the forefront.
Okay, fascinating stuff on the regulatory front, but let's shift gears a bit and look at the broader market. Regulation aside, the crypto world is always buzzing. What are the numbers telling us right now? What's driving things?
Well, a big driver continues to be ETF inflows. Ever since BlackRock got involved, that's been huge. Just in the last 24 hours, we saw ETF inflows around $766 million. Pretty significant.
Wow.
And the overall market health looks strong, too. The global crypto market cap is hovering right around $3.99 trillion, according to CoinGecko. CoinMarketCap has it slightly lower, $3.85 trillion.
Still massive numbers.
Massive, but what's really striking is the 24-hour trading volume. It hit $193 billion.
$193 billion. That seems really high.
It is incredibly high,
Yeah.
especially for a Monday, which is still Sunday in much of the West. Before the big institutions jumped in, daily volumes were more like $40, $60 billion, maybe $20, $30 billion on weekends.
So a huge jump.
A huge jump. It's up 11% in just 24 hours. It really shows how much more liquidity and activity there is now. Institutional capital flowing in.
Okay, so lots of activity. But I noticed Bitcoin's price has been relatively stable lately, while Ethereum and XRP seem to be pumping up, as they say. What's the story with Ethereum? Why the strong performance?
Yeah, Ethereum's run has been really notable. It's definitely more than just simple market rotation, it feels like. Its market cap is now up to $457 billion.
Yeah.
Just over a month ago, it's below $300 billion.
Huge jump.
Huge. And some people are even talking about it potentially reaching a $1 trillion market cap. And look at its dominance. It's climbed to 11.60%. Meanwhile, Bitcoin's dominance has actually dipped a bit, down to 60% from its usual 63-65%.
Interesting shift.
Very. And the trading volume tells a story, too. Ethereum's 24-hour volume is $43.26 billion. That's almost 80-90% of Bitcoin's volume, which is $53.47 billion. Usually, Ethereum's volume is closer to half, maybe even a third of Bitcoin's.
So what's fueling this?
A lot of it seems tied to this narrative around the Ethereum treasury firm. The idea is gaining traction. It's basically becoming cheaper and easier for institutions and retail investors to get exposure to Ethereum. Plus, there's the added incentive of staking becoming a validator on the network and earning rewards. That's attracting capital, too.
Right, the staking yield. Makes sense. Now, we love finding new ways to understand the market here. I heard about a fascinating new metric being tracked for dApps, decentralized apps. What is this 24-hour DApp volume telling
Ah,
us?
yes, the DApp volume metric. It's really insightful. It basically measures the total value of tokens transferred into DApps and smart contracts from unique active wallets over 24 hours. DappRadar.com tracks this. It gives you a sense of actual user activity and capital flow within different blockchain ecosystems.
So who's leading?
Ethereum is way out in front. $107.92 billion in 24-hour DApp volume shows really strong engagement there. After Ethereum, you've got Binance's BNB Smart Chain at $49.21 billion, then Unichain G at $11.33 billion, Solana at $10.1 billion, and Arbitrum at $9.13 billion.
Interesting distribution. What about other metrics quickly? DX volume, TVL?
Sure, decentralized exchange volume is around $13.45 billion. Total value locked, or TVL, across DeFi is sitting at about $141.59 billion. DAKs make up about 40.5% of that TVL. One area that's still a bit stagnant, though, is real-world assets RWA TVL. That's still around $12.62 billion. We keep hoping to see that grow more with tokenization, but it hasn't taken off hugely yet.
Something to watch. And stablecoins?
USDT Tether is still the giant there, $113.70 billion in volume.
Okay. And just quickly, current prices.
Right now, Bitcoin is around $118,480. Ethereum is at $3,765. That's up over 26% in the last week.
Wow.
And Ripple's XRP is at $3.50, up about 23.5% in 7 days. Some link that recent pump partly to the buzz around the Genius Act and stablecoins.
Got it. So lots happening in the markets. Let's broaden the view again, look globally. Across the pond in the UK, politics and crypto seem to be intersecting in a pretty interesting way. What's going on there?
Yeah, it's quite fascinating. Nigel Farage, who's generally seen as pretty pro-crypto, I mean, he's accepted Bitcoin donations before, and his party, Reform UK, accepts them now. He's potentially on the verge of becoming the next prime minister.
Really?
Which contrasts sharply with the Labour Party, the main opposition, which is more left-leaning. They're actually pushing to ban crypto donations. One of their ministers, Pat McFadden, is calling for updated laws specifically to block them.
So a clear political divide there.
It really highlights a trend we often see. Left-leaning parties, like Labour in the UK or Democrats in the US, historically tend to be a bit more skeptical or cautious about crypto, often citing concerns about regulation, consumer protection, illicit finance.
Right, the control versus freedom theme again.
Exactly. Now, shifting from politics to tech challenges, there was a long-standing Bitcoin bug that finally got fixed. Tell us about that.
Yes, this one's interesting because it highlights the nature of decentralized systems. It was a 5-year-old bug in Bitcoin Core.
Basically, it allowed an attacker to flood a full node's hard drive with excessive log data, causing crashes, even potentially damaging the storage.
Ouch, not good.
Not good at all. And it took 5 years and multiple attempts before the core developers finally merged a patch to fix it.
5 years? Why so long?
Well, that's the challenge of decentralization, right? It's not like Facebook or Google where a central team can just push out an update instantly. In Bitcoin, adopting the fix is voluntary. Node operators have to choose to update. Right now, apparently only about 16% of nodes are running the latest version with the fix. So most nodes still need a manual update to be fully protected.
So the fix exists, but adoption takes time.
A lot of time. It really underscores the trade-offs. You get censorship resistance, decentralization, but bug fixes and upgrades can be slow and complex. It makes you ask that philosophical question. What's the cost of decentralization when it comes to things like rapid security fixes?
Yeah, it's a constant balancing act. And speaking of risks, unfortunately, there was another security incident, a major hack in India.
Yes, sadly. Last Friday, July 18th, the Indian exchange CoinDCX reported a hack. About $44 million was stolen. It came from an internal liquidity provision account, importantly.
Okay, so not directly from user accounts.
Correct. The CEO was quick to state that customer funds were not affected. The exchange absorbed the loss from its own treasury.
That's crucial, but still a big loss. Any details on the hack?
On-chain analysis suggests the attacker's wallet was funded via Tornado Cash, a privacy mixer, and some funds were bridged from Solana over to Ethereum. But the main takeaway for listeners really is that age-old crypto saying, not your keys, not your cryptocurrencies.
Always worth repeating.
Absolutely. This is another stark reminder. Exchanges are for trading, temporarily. They shouldn't be treated like your long-term bank vault. You really should withdraw your funds to a wallet you control, a hardware wallet or a trusted software wallet, as soon as possible after buying.
Good advice.
And it also pays to research an exchange's security practices. Do they have proof of reserves? Do they use multi-sig cold storage? Staying aware of these incidents helps you understand the risks.
Definitely puts the responsibility on the user to be vigilant. Okay, let's pivot now to our other major topic, artificial intelligence. We're seeing some really interesting developments, particularly coming out of the Middle East. What's happening there?
Yeah, the Middle East is definitely making a big push to become a major player in AI. It's not just about oil anymore. We saw Saudi Arabia and France announce a significant research partnership. The goal is explicitly to boost AI tech and drive innovation.
Part of their Vision 2030 plan.
Exactly. It fits right into Saudi Vision 2030, focusing on building strong digital infrastructure and fostering high-tech industries. They're actively engaging with global tech leaders, too. Collaborations with French Research Institute in Korea, talks with Mistral AI. It shows serious intent.
And it's not just government initiatives, right? Elon Musk's XAI is also making moves in Saudi Arabia.
That's right. XAI is reportedly in serious talks to lease substantial data center capacity in Saudi Arabia. They need massive computing power to train their AI models as they try to expand and compete.
Compete with whom, mainly?
Their big targets are OpenAI's GPT models and Anthropic's Claude. They want to be in that top tier. So they're looking at potential partners in Saudi for this data center space.
Who are they talking to?
Two main possibilities mentioned. One is UIA, which is backed by Saudi Arabia's sovereign wealth fund, the PIF. UIA offers huge potential capacity, but it's more of a long-term play as a lot of their infrastructure isn't built yet.
Okay, so maybe not immediate.
Right. The other option is apparently an unnamed company that already has a 200-megawatt facility under development. Yeah. It could be a faster short-term solution for XAI.
And this all fits into a bigger picture of AI investment.
Absolutely. Global AI spending is projected to hit something like $320 billion this year. And Saudi Arabia's public investment fund, the PIF, is expected to be a key player in funding AI ventures, potentially including future funding rounds for XAI itself. There's talk that XAI could reach a valuation somewhere between $170 and $200 billion. So the Middle East is positioning itself as a critical hub for capital and infrastructure in this global AI race.
Okay, wow. We have covered a lot of ground today, from the complexities and debates around the new U.S. Genius Act for crypto,
Right.
to Ethereum's really strong performance in the market, the sort of philosophical challenges of fixing bugs in decentralized systems like Bitcoin,
Yeah, that trade-off.
urgent security reminders from that CoinDCX hack,
Exactly.
and now this global race in AI development with the Middle East emerging as a major force.
And if you sort of connect all those dots, you can really start to see how interconnected it all is. These aren't separate silos. These developments in regulation, markets, technology, they're all shaping the future of finance and tech together right now.
So what does this all mean for you listening? Well, it's clear that being informed isn't just about knowing the headlines. It's about understanding the deeper forces at play, the innovation, the regulation, the security risks, the global competition, and what it all implies.
Which leads us to a final thought, maybe a question to leave you with. As we see governments and these big centralized entities increasingly trying to, regulate or guide these powerful emerging decentralized technologies like crypto and AI, how much of their original nature, their innovative spirit, their borderless potential, their decentralization, how much of that will actually be preserved? And what new forms of value or perhaps new forms of control will emerge in their place?
That is a really important question to think about. We encourage you to keep exploring, keep asking questions. Thanks for joining us on this deep dive today.